What's going on, guys? It's going to be our Summary Markets episode 102. We're going to talk about SPY, Qs, gold, oil, USD Jpy, Bitcoin, and Ethereum as always. And then we're going to talk a little bit about our watch list. So let's get started with SPY. So obviously the TLDR of this video is going to be pretty much everything nuked last week. We had a massive sell-off across pretty much every market. You had the SPY and Qs nuking, you had crypto nuking, pretty much anything that was related to the crypto markets or the equities market was nuking. We had a few names that were trying to push higher, but the majority of stocks were down. We saw some of the biggest corrections we've seen in the past 2 years. So pretty much everything is either hitting support or breaking support. And we're going to cover that right here. So starting with SPY, you had a fake out on that previous high, which was the late December breakout. And then you returned back to the high before the breakout, the previous all-time high, which kind of acted as like a range high level. We talked about that level, I believe, last week, that 473, 474 area. And then you kind of faked out, or you tried to break out that level and then nuked. And you lost the monthly VWAP, you lost the 50, you lost the trail. Basically, every single local support was being broken. And then we had a couple of bearish targets based on the gap fills. First one being 455, second one being 447, and the third one being 442. So now that all these gaps have been filled, we can go ahead and get these off our chart. And the remaining gaps that we have a gap at 435. We have one, let's see. There's one right here at 410. And then we have the notorious 400 gap. Let me actually mark the one at 410 here. Make sure we don't miss that. So all these local gaps have finally been filled. We have the local one at 435, but once that's broken, there's no local gaps in between this area here. If you do lose the 200 EMA, which we currently are, so if we get a couple of daily closes below this level, most likely going to come back down towards that like 429 to 430 area, which was that low back here in September and October. If it can hold above the 200, and by the way, this is the first time we're testing the 200 in nearly 2 years. Basically, since we broke the 200 in COVID around June, we have not tested it fully. We had a couple of pullbacks, like we had this one here in September, this one here in October, but they never actually touched the 200. So this is the first tap of the 200 in nearly 2 years, which should give us some buy pressure. We should see some buy pressure coming in like Monday, Tuesday off the 200. If we don't, then things are looking pretty bleak. If they do bounce off the 200, the first major level you want to be looking for is around 445 to 450, kind of where we had that previous support before we pushed it at all-time high. That is the major level you want to be keeping an eye on moving forward. Now, if we don't bounce, like I said, look for that 429. And then if it gets really ugly, you want to look for around 422. If we look at the weekly, and let me actually clean our chart up here before we move on. If we look at the weekly, let me hide my drawings. We're coming into the weekly 50, which is usually very close to the daily 200. So that would be very strong support kind of around 433. If you lose that, it will be the first time we've lost the weekly 50 since the COVID nuke way back in February. We reclaimed it back in June, same with the 200, and we have not touched it since. This is also the first red weekly candle on the OTS. You can see the OTS has been green since May 2020. This is the first red bar since then. We also are breaking the OTS trail for the first time since June as well. We have not flipped the OTS trail red just yet, so right now it's just a pullback, not an actual correction. Correction being a longer pullback. If this did flip the OTS trail, we'd probably be seeing a correction down towards that 400 gap fill and towards around 410 to 415. Now, going to Qs, it's pretty much the same story. First loss of the 50 on the weekly. We're losing the OTS trail for the first time since June as well. We're also testing the 200 EMA for the first time since June. So just to give you guys an idea of how strong this sell-off was, we are basically hitting levels that we have not seen in 2 years. Not price levels, but levels of momentum. Okay, so if we get back above the 200 here on Qs, you have a couple of levels you want to keep an eye on around 368 to 370 as your local resistance, major resistance being around 380 to 383. If it does not reclaim the 200, we have a pretty big level, which I already marked out right here around 342, which would be that previous high before we went on that breakout. Okay? So keep an eye on 342 as your next major support. If it loses that, which would be pretty brutal, probably going to come down towards the gap fill around 331, and then you have a major pivot around 320. Let's hope we don't get down that low. That'd be pretty bad. But for now, I'd keep an eye on the 200 as your main resistance. We also have those levels that I mentioned around 370 to 380. This gap has been filled. Do we have any other local gaps? We have a gap right here, I believe. Has that been filled? No, it has not. So we have a gap right here around 345. And then we have another one way down here around 330. Okay. Moving on to gold. Gold actually tried to push higher last week when the markets were nuking, but it did struggle towards the end of the week when everything was pulling back pretty heavily. You did have that 1835 target get hit. We could not hit the 1860. If it can get back above 1850, look for the 1860 level, and then we have that previous high around 1880. Okay. If it does pull back, same thing that we talked about last week, there's a massive cluster of support with basically every single indicator lining up around 1812 to around 1790. Moving on to oil. Oil is actually maintaining its bullish pressure here, even when the market is selling off. But as we saw at the end of the week, Thursday, Friday, when everything really started to sell off, so did oil. So if the markets can recover, or at least just stop going down as quickly as they are, I believe oil can still push higher and break this 86 high into around that 91 to 93 target. Now, we haven't had really a consolidation or a correction since back here in December, so it is due for a little bit of resistance. You do have a little bit of sell pressure coming in on this little tweezer around 86 to 87, but if we break through that, those targets should be fairly easy. If it does start to consolidate, maybe it goes sideways here, or it pulls back, this should be a cup and handle, and it should be bullish overall. I would not consider this bearish unless it lost around 78. USD Jpy also pulling back, so the dollar was getting a little weak, as we saw with Dixie as well. You are pulling back below the VWAP. If it pulls back, I'd say below 113.50, you're probably going to get down to 112.75, and then you have that level around 111.90. If it does break back above this high around 115.40, you should be getting the previous high. Let's take a look at Dixie, give us a better understanding of kind of what the dollar is doing. You have the distribution forming around 95.50 all the way up to 97, and then we had the failure of the distribution, which acted as a deviation. So now it's creating a deviation and pulling back into the range low. So this is actually quite bullish if it can maintain this range low here. The first targets would be the middle of the range and then the high of the range. We also have the 50 and the OTS trail kind of lining up right above us as resistance. So if we can't break above those levels, it's most likely going to come back down towards the low of the deviation, which would be around 94.60. But for now, as long as you maintain that range low, this is actually a bullish retest. All right, moving on to Bitcoin. I'm actually going to come back to our other chart here. So Bitcoin finally did what we've been looking for the past, I don't know, what, 3 months? We had that massive correction, and we had these levels marked out around 39.8 all the way down to 31.4, the previous accumulation, right? So we're looking at this massive accumulation zone with the volume profile, and it gives us the value area high, the POC, and the value area low. So when I was placing my bids, I started bidding on the value area high just in case we tapped it and then started to correct. And I had my bids going all the way down to 36. So kind of right above the POC. I could have layered my bids basically along the entire accumulation, but I was a little bit more bullish and more aggressive than doing that. So finally, after waiting 3 months, our bids have been filled. All of my bids from 40K to 36K have been filled. The ones closer to 36K were bigger orders, so my average is closer to around 37 to 37.5. The POC is currently holding, which is around 34,200. If we lose that POC, let me zoom in a little bit here. If we lose this POC, we still have the daily pivot. Let me mark this out a little bit. We have the daily pivot around 32.5, and then we have the value area low around 31.4. Those are the two key supports below us if it does lose this level. If we bounce off this level, we could look for resistance around this previous pivot, which is around 36.7. We also have a weekly pivot around 38.2. So those would be the two key levels above us that we need to reclaim. If we want to be long-term bullish, we need to reclaim the value area high, which is around 38.7. Okay, let me go ahead and clean our chart up since we're actually hitting these levels now. So these were our first bearish targets. Those have been hit. These were our first bullish targets from way back in September and October if you guys took those trades. Let me go ahead and delete these as well. And then we will leave the rest of these. That's okay. Yeah, long story short, what you want to keep an eye on is the anchored VWAP from the high, which is around 51. All of the anchored VWAPs that we were previously looking at from the lows and the previous all-time high, they're kind of all lining up around this big cluster of resistance around 45 all the way up to 52.7. So if you're a long-term trader, I'm talking like looking 2-3 years out, we need to reclaim this big cluster before it's going to be overly bullish. Okay, this is the key area that will cause pretty much any bounce to be shorted. Excuse me. And then for the bears, if you guys are long-term bearish, we are not extremely bearish until we lose the value area low, which is around 31.4. And to be honest, I hate to even find levels below that accumulation, because if we start getting below this accumulation, there is not a whole lot of support here to hold you up. So if you lose this like 28.9 to 30,000 mark, you could quickly, and I mean quickly, fall back to around 19 to 20,000. There is really not a lot of support in between those two levels. So if you guys are bullish, you really want to bet on this value area low holding strong. Okay. Moving on to Ethereum, basically the same story, just completely nuking, destroyed all of our levels. It's a little bit more bearish than Bitcoin. So as we can see on Bitcoin, we had that accumulation, we pushed out, and now we're retesting the accumulation. With Ethereum, it's losing the accumulation entirely. So the accumulation value area high was around 30.90. The value area low would have been around 28.50. Both of those levels have been completely lost. So this value is now resistance. So any pullback into that area could be sold very heavily. Okay, so you have to be very careful. If we do lose this pivot, which so far has been calling the bottom nearly perfectly, this pivot at 24.05 is acting as major support currently. If we lose that pivot, we do not have another pivot until way down at 1200. That doesn't mean we're going to go all the way back down to 1200. It just means that this area here is not a magnet zone. We don't have any of those magnets to kind of pull price back into it. What we can do is we can do exactly what we did here. We can take the volume profile of the accumulation, So let's zoom in here. Make sure we're grabbing these levels. So we have the value area high. And I like to color code this so I just don't get lost. We have the value area low. And then we have the POC here. And let's make this dash. There we go. Okay, so moving forward, if we lose this pivot, which is also the value area high, we would be moving down towards the POC around 2100, and then the value area low around 1960. Okay. When you guys are drawing out your charts, kind of like how I'm doing, you need to find these levels so that you're not just guessing, right? So you're not just like looking around the chart and like, oh, okay, 2400 looks okay, 2000 looks like it should be a support. You need to have some reasoning behind finding those levels and thinking that there's going to be support or resistance there. So as you guys have seen, you've watched my videos many times, we like to use pivots, we like to use volume profile, we like to use accumulation distribution techniques, stuff like that. But you guys don't have to use those exact same techniques. You can use whatever you like. Just make sure you have some reasoning behind finding those levels. Okay. So long story short, Ethereum is stuck between this massive support zone and this massive resistance zone. In between these two areas, there's not a whole lot. And one thing that we can do is I can show you if we take, let's say, the start of this accumulation to where we are now. You can see there's kind of a big gap right here. There's not a whole lot of action in that area. If we go back a little bit further, let's say we go back to the start of this impulse. It fills in a little bit. Okay, so we do have a little bit of action there around May, and then we have some around April. But that's not local price action, right? If we're taking the most local move, we're taking the local accumulation that created the impulse up, and then we have the impulse down. So if you're looking at like what the current market is doing, this is like the three-step phase, right? You have the first phase here, which is accumulation. Then you have the impulse, and then you have the impulse down. You could say it's 4 steps, like we have the distribution, then we have the impulse down. Either way, you get my idea. This is the local market. All of this is kind of old news. So looking at the current market structure, this is the current volume profile. We do not have a lot of action in this area here. So for my short-term guys, if you guys are looking to scalp this kind of gap, you want to be taking very small trades, right? You don't want to be going very heavy size because you very well could get chopped out, okay? And if you are scalping, you want to understand that the sell pressure around here is going to be a lot stronger, and the buy pressure around here is going to be a lot stronger. So if you're looking to scalp long, you want to be playing in this area. If you're looking to scalp short, you want to be playing in this area. The kind of dead zones in between, you want to be careful because you can get chopped. All right, let's move on. I'm going to get rid of this. So for our watch list, because the entire market is selling off, I do not recommend trying to pick individual names. Unless there are names that you've already started building positions in and you're kind of dollar cost averaging for the long term, that's okay. But for short-term trading, looking to take like swing trades or looking to take weekly options, I do not recommend trying to pick individual names while the entire market is kind of following the indexes, right? The indexes are just selling off and the entire market is just getting destroyed, okay? So when that is happening, you do not want to be picking individual names. You want to be paying attention mainly to the indexes. So we do not have very many names on our watch list currently. The names that are on my watch list are the names that have been on my watch list for the past few weeks. We're still keeping an eye on Disney. We're still keeping an eye on AMD, Snapchat, Walmart, Ford, all these big names, right? But I am not going to start building positions in these names until SPY finds a very strong support or it starts to at least accumulate. I do not like knife catching during times like this. It just does not fit my style of trading. We have already started building positions in names like PayPal, Uranium. We had some Uber leaps. We had Netflix, very sadly, obviously. I started building this position a little early, and the earnings definitely hurt us. I started building here. I added on here. I am going to add one more time. We're going to double our shares to bring our average down quite a lot, but I have not done that just yet. I am waiting to see if SPY can find an accumulation or if SPY can find some buy pressure before I do my final ad on Netflix. As I've said for the past few weeks, I am still cash heavy. I am mainly in cash. The majority of my investing funds are in cash. And I just feel like this market, cash is king. Even though inflation is skyrocketing, the majority of assets that you would like to invest in that are typically a hedge against inflation are not doing so hot. So even look at Bitcoin. You would assume Bitcoin would be skyrocketing as a hedge against inflation. It's not. It's getting hurt. The funny thing is, we talked about this in Discord. We talked about this on Twitter as well. People give a lot of shit to the NFT community, right? People think you're investing your money in these dog shit pictures that nobody cares about. The funny thing is about NFTs, they hold their cash value better than any asset I have seen in a very long time. Even the ones that are extremely stupid, like the sappy seals that we bought into, 4 or 5 months back. When the market corrects and say you buy the seal at 1 Ethereum, and let's just say 1 Ethereum was $4,000. The market starts to crash, so now Ethereum is $2,000. Well, the seal is most likely going to be worth relatively close to 2 Ethereum because it's holding its cash value and it's actually gaining Ethereum value. One major example of this is the Azukis that just came out, one of the ones that Sticky was trying to tell us about in Discord. They're like anime characters if you guys haven't seen them. The Azukis, they minted at 1 Ethereum when Ethereum was around, I think, 3,000 to 4,000. And then the market started crashing, right? Ethereum dropped all the way down to close to 2,000. They actually went up in value. So their dollar value started at around $4,000. They went up to $10,000 as the floor. Some of them were even higher than that. But as the floor, they went up to $10,000 and Ethereum crashed, right? So now their Ethereum value is 4x, even 5x what it used to be. So that's one thing to look into for you guys that are very skeptical about NFTs. If you find good projects, that's the hard part about NFTs, is finding projects that are not scams, that are actually good projects. But if you find good projects, they keep their cash value. So they're almost the best hedge against the crypto markets going down. If you want to maintain your cash value, but gain Ethereum value while holding an asset, those NFTs are doing just that. So that's the last thing I'll say. We're going to close this video out with that. I appreciate you guys watching as always. If you guys did like this video, make sure to hit the like button and subscribe. I will see you guys tomorrow at 3 p.m. Eastern. Remember our stream schedule for this week. It's going to be Monday, 3 p.m. Eastern. And then Tuesday, Wednesday, Thursday, we're going to be doing our morning call, so 9:15 a.m. And then Friday, we will be doing the Power Hour stream. So Monday and Friday, Power Hour streams. The days in between, we're going to be doing our morning call. All right? Appreciate you guys watching. I will catch you guys tomorrow. Peace.